Today, we will discuss market structures and human emotions and find out the best entry models. In the first section, we'll talk about different cases before trading and how to create a price bias. Then we'll talk about how to combine high and low time frames. And you will witness how the same things keep happening in high and low time frames. In the last part, I'll talk about a couple of short trades that I took and how to understand where to look for shorts and longs. We have so much to do. If you're ready, let's start. Okay, let's understand the market structures and different types of emotional phases and how to avoid traps. When we look at the 4 hours time frame, we can clearly see the forming uptrend. The first thing that I would like to talk about is where to look for shorts and longs. Once a significant break happens from a previous significant swing point, ideally you no longer should be looking for long trades. Because of the expensive zones above the breaks, price is getting expensive to buy. This is not just for 4 hours, it is for every single time frame. You have to understand premium and discount zones really well. Think about your life and shopping habits. Unless you are super rich, are you buying a product once it is very expensive or when it is discounted? Trading is no different. Only breakout scalpers trade these areas and they are really quick. What we do is different. Let's also add our premium and discount zones. Once the price is above the break and the premium zone, this is when you should stop looking for long positions. This is the greed stage, when new traders will be trapped by social media, influencers, and so on. However, actually, this is the place where early buyers and market makers will start taking profits from their positions. Never forget this. The premium area is where the people become greedy, and the discount area is where the people become fearful. Market makers use these emotions to trade. Okay, let's understand possible cases that might happen and how it will be traded. First, a bullish case. Price may break above the previous swing high point strongly and continue the bullish trend. What would you do about it? It's simple. First, we look at the left of the chart. Are there any supply areas, any imbalances, any swing high point, or any liquidity hunted? These are the first things that we should check. Then, when the price is above the break in the premium zone, with a greedy state, we could go in lower time frames, find a strong quality market structure break and try to short it. It's that simple. And then the price moves to the discount zone. Then we may try to check quick long opportunities because this is where the price is cheap, because this could be the hope stage. Let's check the second case. This time price keeps ranging, cannot break the significant highs and lows strongly. Only give weak breaks or no breaks at all. Price keeps consolidating between the last premium and discount zones. Again, what we do is use our premium and discount zones to find quick short or long opportunities. However, you have to confirm a market structure break first for a trend shift. Then you may look for quick trades when the price is cheap or expensive. Finally, let's assume the price breaks down very strongly. Then what can we do about it? First of all, we'll have a brand new range, premium and discount zones, because market conditions have changed. Then checking out left of your chart. This is the only way to escape from stop hunts. Are there any demand areas, imbalances or swing low points that can push the price back to the premium zone? Then you may wait for the market change. Then you could trade in low time frames all the microstructures like break-off structures and imbalances. Once the price is expensive again, this time you look for possible supply areas that can push the price down. I think you understand the conditions of market structures now clearly. As you remember, this is the 4 hours time frame. Now let's dive into lower time frames. With this 1 hour time frame, I'm still keeping my 4 hours main trend and large premium discount zones. So I can know if the price is expensive or cheap in the main trend. If you draw your market structures in a 1 hour time frame, you'll witness how the momentum starts with a 1 hour market structure break from the bottom until it breaks the previous swing high point from the 4 hour time frame. Then with the grid stage trapping all the beginner traders above the break and with the premium zone. Then the market structure shifts again because people start selling. They buy it cheap and sell it expensive to the new traders. Now I want you to notice the micro, premium and discount zones with all the micro breaks in a 1 hour time frame. Can you see it? Price action is all about fractals. Simply put, the same things keep happening in high and low time frames again and again. In all time frames, the thing that you should be focusing on is buying cheap and selling expensive. That's it. However, it is not the case all the time. If the price does not willingly go into premium or discount zones, at least wait to get into your entry zone, which is inside market structure breaks or break-off structures. Otherwise, just let it go. There will be many other opportunities. In this area, I start taking short trades until the price reaches the 4 hour premium zone. There are so many trading opportunities. Let's go into 15 minutes time frame and check out the trades and other possibilities. In a 15 minutes time frame, I noticed this sharp break with a giant imbalance. There is an internal break and also a market structure break. The break left behind a giant imbalance to be filled. I also noticed that equal lows at the bottom. This was the first place to be hunted. I entered this trade with a large stop loss with a limited target. This was like a 1.5 hour profit. When I opened the Twitter, I keep seeing like 50 hour, 100 hour. Once I saw a 185 hour trade. I just can't stop laughing. With over 100 hour trades, you could be a billionaire easily. But I do not care. All I care is making money and growing my account. So, we are in the premium zone with 4 hour time frame, and price tries to fall back to the discount zone in the 4 hour time frame. I saw the imbalance with 15 minutes time frame right here as a target. I entered the trade after the break, and when it pulled back to inside my entry zone within the break. This was a little riskier trade because there was another imbalance area in the extreme zone. Sometimes you have to take risks. Again, I had a large stop loss area with limited profit like 1 hour. And can you see how the imbalance was filled and the price reacted? Amazing. From now on, I did not enter a trade for a while because it was powered by the imbalance and it was losing momentum. No need to push the trades and fall into traps. As I said in the previous video, try to trade market structure breaks and early break-off structures as much as possible. This way, you will be stop hunted less. Okay folks, I think we covered so many things here. I hope that you are improving really well. Please remember the program. 3 months of paper trading, 3 months of really small risk, and 6 months of profitable experience. If you apply this, you'll be successful. Would you like to subscribe to the channel and help me to grow it? Thank you, take care, and see you soon.